the whole world is looking at Europe and saying, well, Europe, get your act in order and do something about it. And as you will notice later on during this session, the statement we are going to issue as shadow committees is also, to a large extent, dealing with some of the problems in Europe. Europe, of course, as you will know, is unique in the sense that it has a very large and important diversity and also institutional complexity, in terms of we are a collection of, the European Union is a collection of course, 27 countries, which is basically a type of internal market in which there is freedom for the flow of goods, persons, capital and services. Then out of the 27 countries, we have 17 countries which are having the single currency, the euro. Then that means that we also have 10 non-Eurozone countries, and then of course we also have a country like Switzerland, which is very closely linked to the European Union, but of course still not a member, although I understand voices in Switzerland are becoming stronger to join the US, to join the, you know, after some, you know, and of course Charlie, who has Greek ancestors, is going to join the European Shadow Committee, and so we are nicely mixing up in creating a type of multicultural diversity of the Shadow Financial Regulatory Committees. In terms of the crisis, when it started in August 2007, how was Europe hit? Well, during the first year, as you will recall, there were some banks were hit, Northern Rock in the United Kingdom. There are quite a few German banks, including IKB, which was hit because they had been investing substantially in US subprime loan portfolios. The reaction in Europe and the big crisis came, of course, just in many other parts of the world or in the US after September 2008, when Lehman Brothers failed. And the type of reaction we have seen in Europe, in many European countries, was basically a type of big bailout in terms of the government providing capital injections into the banking system. Some banks got nationalized, like Fortis, ABN AMRO. Loan guarantees were provided, for instance, the Alt-A portfolio of real estate mortgages of ING in the United States. And there were also all types of bank guarantee liabilities. So basically, if large banks started issuing new bonds, then there was a type of government guarantee. In Europe, in late 2008, an important committee started working, the committee chaired by Jacques de la Rosière, one of the former managing directors of the International Monetary Fund, and they produced a report of increasing and strengthening European supervision, which has led to the situation that as from January this year, some new institutions were created. Most importantly, I would say, the European Systemic Risk Board, for a type of observatory of systemic risk, of monitoring and assessing systemic risk in the Eurozone, but also 3 new supervisory agencies. They are new in the sense that they were created, but they are the successors of types of former types of cooperation of national supervisors in Europe. And of course I'm talking about the European Banking Authority, the European Securities and Markets Authority, and the European Authority for Insurance and Occupational Pension Funds. These new supervisory agencies means a type of strengthening of European supervision, of a cooperation between the European supervisors, but still supervision is exercised at European level. And as a shadow committee, for instance, in the past, we have been arguing that this is not likely to remain a stable situation for the supervision of, say, the large pan-European banking and financial services groups.